Morgan Stanley's Adam Jonas upgrading Tesla to outperform and raising his price target to $400. That's about 60% upside.
This kind of news about Tesla and its stock isn't really out of the ordinary. What's surprising, though, was when Morgan Stanley upgraded the company to overweight from equal weight and raised its price target to $400 from $250. Just a couple of months ago, Morgan Stanley analyst Adam Jonas downgraded Tesla to equal weight from overweight, but raised his price target to $250 from $200.
Adam is the one that's suggesting the potential here, and some other words that he uses within the note as he talks about this potentially being a $10 trillion marketplace, and that Tesla maintains an asymmetric advantage in that marketplace. Now, you hear those words, that's pretty compelling in terms of believing that Tesla can continue its upward trajectory that it's had so far year to date and eventually hit that $400 price target that he has.
I have to be upfront with you all. While the team has defended the Tesla OW rating all year, I did not see this 111% year-to-date rally coming. Jonas wrote at the time, "We think it's understandable and are sympathetic to the changes in the market narrative around the name." Jonas said he and the Morgan Stanley team are not trying to call the end to the recent Tesla rally. And while there is still some investor skepticism out there on Tesla, meaning there might be more room to run, the risk-reward for investors now is fairly balanced. Hence, the rating downgrade, suggesting investors shouldn't build up a bigger position in the name, and hiked price target at the same time. That was then. Now, unsurprisingly, Tesla rallied 6% shortly after Morgan Stanley said its Dojo supercomputer could power a nearly $600 billion surge in the electric car maker's market value by helping speed up its foray into robotaxis and software services.
It's a total addressable market story, right? I mean,
yes.
if they can get to 10 trillion, that really is very compelling. That being said, the stock's up 110%. Before today. It's now up 120, trades at 80 times forward. And so I think the question is it an auto company or a tech company? He's now pivoted towards this being more of a tech company.
We've heard that in the past, though, right?
Right. No, absolutely. But this is a company that gross margins are going down, right? I mean, that's kind of troubling. Talk about lack of pricing power, right? They've been lowering prices. So to me, if you're going to pay up for this, you have to really buy in to the autonomous angle and the technology aspect of this company.
I don't think this can be a tech company without the auto company. I mean, the first line from Mr. Jonas's report is investors have long debated whether Tesla is an auto company or a tech company. Now, today it's being valued as a tech company. Last week it was being valued as an auto company because what you're talking about with gross margins. Here's the thing. I don't think you can get that total addressable market. I could be wrong on this, without the auto business doing well so that you've got a customer base upon which to use that AI and get the data that you want. Now, here's where this becomes a problem. Competition has been creeping up.
Tesla, already the world's most valuable automaker, started production of the supercomputer to train artificial intelligence models for self-driving cars in July, and plans to spend more than $1 billion on Dojo through next year. Morgan Stanley shifted to an overweight rating on Tesla on the view that the biggest value driver looking ahead is the company's software and services revenue. Analyst Adam Jonas said that the same forces that have driven Amazon's AWS to reach 70% of the company's total EBIT can work for Tesla and help it open up new addressable markets that extend well beyond selling vehicles at a fixed price. A major part of Morgan Stanley's bullish thesis on Tesla's tech advantage is tied to Dojo, which is the purpose-built supercomputer designed in-house by Tesla to train the full self-driving system that sits inside every Tesla vehicle. Tesla management has said it needs as much compute power NVIDIA GPU clusters as it can get its hands on, but cannot physically secure the amount of chips necessary to train cars. The Dojo play is based in part on the rationale that the company can develop a more efficient system for their specific needs while not funding a supplier's 60% gross margin. We believe that Dojo can add up to $500 billion to Tesla's enterprise value, expressed through a faster adoption rate in mobility, robotaxi, and network services. Morgan Stanley hiked its price target on Tesla to $400 from a prior price target of $250 and called the electric vehicle stock its top pick in the sector. Notably, Tesla released a white paper regarding a new standard for its Dojo supercomputing platform almost 2 years ago now. CEO Elon Musk teased the paper as more important than it may seem. A year after that, Tesla unveiled its latest version of its Dojo supercomputer, and it was apparently so powerful that it had tripped the power grid in Palo Alto. Dojo is Tesla's own custom supercomputer platform built from the ground up for AI machine learning and, more specifically, for video training using the video data coming from its fleet of vehicles. The automaker already has a large NVIDIA GPU-based supercomputer that is one of the most powerful in the world, but the new Dojo custom-built computer uses chips and an entire infrastructure designed by Tesla. The custom-built supercomputer is expected to elevate Tesla's capacity to train neural nets using video data, which is critical to its computer vision technology powering its self-driving effort. As earlier mentioned, it was in 2021 when, at Tesla's AI Day, the company unveiled its Dojo supercomputer, but the company was still ramping up its efforts at the time. It only had its first chip and training tiles, and it was still working on building a full Dojo cabinet and cluster, or exapod. Tesla unveiled the progress made with the Dojo program over the previous year during its AI Day 2022. The company confirmed that it managed to go from a chip and tile to a system tray and a full cabinet. Tesla claimed it can replace 6 GPU boxes with a single Dojo tile, which the company claims cost less than 1 GPU box. There are 6 of those tiles per tray. Then, by July of this year, Tesla announced that it had started production of the Dojo supercomputer to train driverless cars. Simply put, the supercomputer has gone into production and is expected to elevate the company's self-driving efforts to the next level. In its second quarter earnings report for 2023, the company outlined 4 main technology pillars needed to solve vehicle autonomy at scale: extremely large real-world dataset, neural net training, vehicle hardware, and vehicle software. We are developing each of these pillars in-house, the company said in its report. This month, we are taking a step towards faster and cheaper neural net training with the start of production of our Dojo training computer. Previously, Musk had claimed that Dojo will be capable of an exaflop, or 1 quintillion 10 to the 18th power floating point operations per second. That is an incredible amount of power. To match what one exaflop computer system can do in just 1 second, you'd have to perform one calculation every second for 31,688,765,000 years, Network World wrote. Now, why does Tesla want to build its own $1 billion supercomputer? Tesla's Dojo supercomputer will handle petabytes of data generated by its car's autopilot and full self-driving modes. While the trillion-dollar club of Google, Microsoft, and Meta plan to be the first users of NVIDIA's supercomputer, Tesla has decided to build its own. The EV manufacturer has announced an ambitious project to build a powerful computer to store and manage the petabytes of real-time data generated by millions of Teslas worldwide as its car sales keep rising. During Tesla's earnings presentation around mid-July, CEO Elon Musk told investors that the company would commit as much as $1 billion to Project Dojo, starting work on a supercomputer with powerful machine learning features. Dojo aims to improve the software within Tesla's rapidly growing fleet of autonomous vehicles and to process the streams of data that these vehicles send back. For 2023, Tesla expects to remain ahead of its long-term target of a 50% compound annual growth rate with 1.8 million vehicle sales. In light of this, it is not at all surprising that Morgan Stanley named Tesla a top pick at Morgan Stanley mainly because of its AI mojo. The analyst said that they believe Dojo, a dedicated supercomputer, has the potential to increase Tesla's enterprise value by as much as $500 billion through accelerated adoption in mobility, robotaxi, and network services (SaaS). According to analysts, in order to improve the FSD system's efficiency, Tesla needs to address challenges related to data collection, processing power, speed, efficiency, and scalability. They also said that Dojo is designed to meet these challenges by providing the computational power necessary to process extensive real-world data from Tesla's vehicles. With that, the firm also named Tesla its top pick. Even in December of last year, Morgan Stanley named Tesla one of its 3 top picks for 2023, citing its future growth opportunities. Despite Tesla's recent challenges with its stock valuation, many analysts still saw the automaker stock as an opportunity for value growth. Overall, looking at Tesla's financials and the company's future, investors can get a better idea of the condition and perhaps opportunity of the stock. Tesla has solid fundamentals, high earnings and profitability, low amounts of debt relative to competitors, and continuous growth in demand for all of its products. Looking at future product offerings offers more good news. Make sure to stay tuned for more Tesla stock content.